My name is Don Ginsel. I set up Holland Fintech almost 9 years ago, I think already, and still run it as CEO. And we're really grateful here to bring you with our team to Startupbootcamp today, who's our kind host. So thank you very much, Startupbootcamp, for bringing us here, because it's really nice to actually have this accelerator environment that we can combine with the open network of Holland Fintech, where there's a lot of synergies by collaborating. So I'm really happy that we're able to do that, Elizabeth. Please come up and tell us a bit about where we are, because some people might not have heard about NBC.
Great. So I don't have the...
Oh, you want to... Then I'll just briefly do the agenda, right? We've got some great pictures for you after the market update, the monthly just brief update on news items that I'd like to give you. We've got 2 presentations from Tribes Capital and UPledge. Then we do the monthly interactive Kahoot quiz. Then we've got Steven van der Zeeuw from PwC, who's going to tell us some of the developments in the market. And we've got Andrea Pinto to also pitch hype after that one, standing there at the back. And then we'll now tell you who did best on the presentation, because we'd like to reward everyone who makes the best effort. And we'll close it off and go to drinks afterwards. That's briefly on our agenda for today. I'll tell you more about Holland Fintech later, because I'd like to give the word to Elizabeth first. There you go.
Thank you very much, and welcome everyone. It's great to see the ecosystem here. When people ask me what's the difference between Holland Fintech and Startupbootcamp, I like to say, well, Holland Fintech is an ecosystem builder in the breadth of the term, so from somebody who has an idea of a fintech to the largest FIs and everyone in between the value chain. And Startupbootcamp takes 10 companies in a specific vertical, fintech being one of them, and really helps them to scale their business hands-on for about 3 months. So who am I? I've been working here at Startupbootcamp for about 7 years. Before that, I was a mentor for Startupbootcamp from Holland Fintech, where I worked, and from ABN AMRO. And then, if you ask me what I do on a day-to-day basis, I'm really a matchmaker. So I'm helping these startups to meet potential mentors, investors, and potential partners. So a little bit about our background. We were founded in 2010, and we have grown to be the largest accelerator outside the US. We made over 1,600 investments in startups and have accelerated 10,000. So in Europe, we're the #1 industry-focused accelerator. We have about 20,000 applications a year, but we look at 150 startups, 50,000, and we have a database with almost 1 million startups. But what I'd really like to highlight is that 4 years after the demo day or impact day, so we're now focused on sustainable development goals of companies, we have people who are still, startups who are still around, and that is one of the highest rates in the industry. So a little bit about the kind of programs we've done. Of course, fintech, insurtech, food tech, fashion tech, e-commerce, IoT, mobility and transport and renewable energy, and net zero. So a little bit about the methodology. We help the startups to accelerate in a sustainable way, helping them on product market fit, on go-to-market, but also introducing them to corporates and other strategic partners. And then a big part is helping them become investor ready. In addition to these industry-focused programs, we also work with corporates, and there are a few ways we can work with corporates to help them with innovation. On the one hand, we can run accelerators just for them, and the other hand, we can use the methodologies that we use with the startups for them to build internally so that they can develop new products and services internally. So we will have Impact Day, so some of you might know it as Demo Day. And for the upcoming Impact Day, which is June 1st, we will have 10 fintechs and 9 renewable energy net zero companies. So we would love to have you here at Impact Day. So please, if you can, scan the QR code. I'd like to thank you for being here. If anyone wants to be a mentor, please, at drinks, come and talk to me, because it's only with you, with these industry experts, that we can really help these startups to scale. So thank you for any of you who have been mentors, are mentors, and thank you for the platform. Thanks.
Thank Thank you, Elizabeth. Thank you. Yeah, I think it is great that Elizabeth indeed and we work together at Holland Fintech. So and I know that she's a fabulous matchmaker, so she does a great job there, I think, for the different startups. And it's always good indeed to explain a little bit that an accelerator takes a specific group through one trajectory where Holland Fintech actually tries to open up to the whole industry to, on a continuous basis, connect and let everyone learn and collaborate. So it's nice to actually bring that together, and that also then sort of concludes my story here. What I'd like to do now is basically just give you a bit of an update on the developments in the last month. So in April we had quite some developments in fintech. We know, of course, that the environment has been a bit more severe on the tech industry since interest rates gone up. We saw some banks default in the previous periods, and therefore actually there's a lot of stress on funding tech companies. And a lot of companies are actually now steering for profitability, so they're cutting costs, they're letting employees go. And since there's a bit of uncertainty in the market, we see that it's much harder actually to do deals. But there's still a lot going on, so I'd like to share that with you. If you'd like to stay even more up to date, you of course can subscribe to the newsletters we have. We send out every Friday a global fintech news update that tells you all the news highlights that we're also showing right now. So generally, what's the big buzz? The big buzz of this year is of course OpenAI, with conversational AI being a really big topic. Funnily enough, Italy banned it because they thought they actually were crossing over some barriers on privacy. And actually, almost not even a month later, they already started to look at ways of opening it up again, because they also figured out that it was quite harsh to completely ban the technology on the whole of Italy. We saw interesting news that the Dutch neobank Bank, who's actually is quite successful, applied for a license in the US. They expect actually still to need about 2 years to complete the complete process of becoming a bank in the US. But they announced it, which I think is a trajectory that a lot of European banks have tried to go, but most of them failed. So we saw quite some some players enter the US market and stop again. So really, curious to see how Bank is going to do at this level. Quite a bold step. Of course, the environment plays an important role. So we saw initiatives like MasterCard, who actually is looking to kill first-use plastic in cards and only look at renewables for that. Quite interesting to see those kind of developments. Digital currencies, central bank digital currencies play an important role still in the industry. MAS has announced plans to launch one, as well as the Bank of England last month. I think this is something that about every month you see a couple of countries announcing their ideas to launch a digital version. In Europe, the digital euro in general, as supposed to be launched by the ECB, is also still heavily debated. Politicians seem to have made a choice to actually go for it, while at the same time you see that the industry is still pretty skeptical about the need of a central bank digital currency on a European level. But so it's an interesting playing field, but if you look at the way that they're being rolled out across all the countries, at some point every region will have one, is most likely. So also the digital euro is going to be there, even though there are still some tweaks to be done on what it exactly is going to be. Tapping Curve launched a wearable tokenization Europe. I think it's an interesting one where, generally the wearable development has been a bit slow recently, but you see now that actually, for example, if you go into the Dutch market, that the iWatch, for example, or the Apple Watch is actually becoming a really dominant paying means in most of the online retail, of offline retail. But we actually, so it's interesting to see that we see actually more tokenization solutions coming up in the payment market. I think because it's been relatively underdeveloped for the last year. Interesting as well is that I think the news about Worldline and Crédit Agricole, from a Dutch perspective, it was always a bit weird because we already have so many big payment players that it's a bit weird to talk about setting up a big payment player in the market. But the funny thing is that in the French market, there's actually a relatively low number of payment service providers, because the banks have always basically kept the market closed. They just kept on delivering the payment services, keeping all the competition out. It's a bit like what the banks in the Netherlands did with launching Ideal to fight off the dominance of the credit cards companies for online payments. You saw that in the French market, the banks were very dominant in handling the payments of the platforms. But you see that there's a big shift going on where actually there's room for external developments and external players to actually pick up on the payment game there. Interesting, I think, to follow that one. A bit in line with that as well, interesting as well, the acquisition, of course, of Ideal by the European Payments Initiative. The European Payment Initiative has been set up by a group of banks that are actually trying to fight off the dominance of the parties like MasterCard and Visa in the infrastructure that's being provided for handling payments. Right? For example, on the European level, you had, of course, MasterCard and Visa, but also Maestro, that you might know as a payment scheme that's on the back of your card as sort of the identifier. And the European Payment Initiative had been set up to actually create a European alternative for that. It seemed like it was going to fail miserably because the banks couldn't agree on what it was going to do. But suddenly, out of nowhere, last month they announced that they were going to acquire Ideal, which is the dominant payment scheme for online payments in the Netherlands, using bank debit cards to facilitate payments. There had been some earlier attempts actually to create European versions of that, with MyBank, for example. But interestingly enough, it seems now that if they could actually combine these two initiatives, they might actually stand a chance of creating a European payment scheme. That is not going to go overnight because Europe has a lot of countries with a lot of opinions and a lot of different cultures around payments. But in any case, an interesting development, I would say, from that perspective. What else do we have? ING Germany launched a new Girokonto feature, which is where they actually look at sustainability completely integrated into your account. Quite an interesting feature that they launched together with Share, which is a company that looks at sustainability projects, and there's sort of it includes donations based on your payment behavior automatically. Quite interesting to follow that as well. A ChatGPT task force developed in the EU, I think fits a bit with the doubts that there were in Italy about the potential risks of ChatGPT. You now see also that on a European level they're actually trying to figure out whether there should be new regulations adopted to actually manage the development of conversational AI. And then just the last one I think is also good to know. The Digital Services Act or the Digital Markets Act, these are typical regulations from the EU that normally don't always resonate a lot in the financial industry because they seem to be focused on generic internet companies. However, if you look at the way that they're being set up, they could actually also include fintech companies or companies with a financial function in the way that they get regulated. Now they actually announced 19 platforms that actually are considered to be large online platforms across Europe. And there's a couple of Dutch players, for example, as well that have been mentioned there, like for example Booking.com, who's actually now also being announced to be a large platform player, which means that they actually have to disclose the use of their algorithms, their fees, and all kinds of other things because they're being considered as a dominant player and a sort of facility that needs to be monitored for potential competition issues. Quite interesting as well, I think, how that's going to turn out and what that's going to deliver on openness in the market on how they operate. Any news I missed? Is there anyone who read something last month and says like, hey, but why aren't you talking about this? This is really important. This happened, but no? Okay.
I think Bloomberg created the biggest artificial intelligence models to predict behavior of the market.
Okay, cool. They announced it. I missed that one. So can you tell us a bit about it? What does it do?
I read it online, and not on the fintech side, but only on the artificial intelligence side. They were basically integrated ChatGPT to extract information for the. I think it's not yet public. They're rolling only on a few players.
Okay.
These are 500 trillion parameters. So it's
cool. Yeah. So indeed, I'm not sure if everyone could hear it. But what Andrea was saying, you'll hear from him later. Is that indeed Bloomberg rolled out a ChatGPT kind of model being used on market data to start predicting the market and help basically with investment advice. It's interesting actually you say that. I've actually seen almost weekly announcements of companies that now are implementing ChatGPT like plugins to enhance their services. So it's a bit like where everyone at some point put a blockchain or an AI sticker in general already on whatever they were doing. You see now that OpenAI and conversational AI are actually going to a similar movement where everyone is just trying to write this whole development. It's good always to be a bit skeptical, I would say, in general, when they start using this. And generally, one of the challenges also with ChatGPT is always that when you ask ChatGPT to create something, who owns it? Right? It's actually something we also briefly before the meeting here discussed a bit. It's quite a challenge to actually identify that. But so, yeah, it's a really interesting space, I think, but still challenging, with still quite some challenges that we have to solve to actually make it work on a day-to-day practice. So it's actually a tool that everyone can use very regularly. But I would definitely recommend you to experiment with it as well. That's definitely fun. So we always try to track a bit where the money is going. So if we look at the largest funding rounds, you'll see the amounts here. So we've got the DMI Finance from India, Kite, mostly based in the US. Actually, also interesting, quite what they do, try to power commerce in a broader sense. Clear Street getting a lot of funding, Quantexa and Ledger, who actually does hardware, blockchain storage, for example, actually raised quite a large amount. It's funny actually to see still some money going on around because the crypto world has been under quite severe pressure over the past half a year at least. So it's interesting to see actually that there's still quite some interest in the Ledger proposition, which does hardware storage of your blockchain tokens. Then if we look at the Dutch market, we see that the Deal Suite investment platform did a really good job in raising 11 million. Fourth Line basically does KYC for banks, for amongst others, raised a really big amount. And Weaviate, quite an interesting player that has a AI native vector database, whatever that means. But it's basically it's a tech company that sort of is a power behind a lot of other platforms to run. It's quite an interesting one, quite complex what they do, but they seem to be quite attractive in the way that they raise their money. So we definitely encourage you to check that out. And also quite some serious names behind that with the index ventures, for example. And ING picked them up. So just some of the research highlights, right? So if you look at our newsletter, we tend to write about the news. We try to look at what the opinion leaders have wrote. We look at some of the research pieces and funding. And for an interesting one that triggered quite some people were the new global predictions for the economy by the IMF. And there you actually see that they were expecting, well, the euro area, for example, not completely to contract, so no real recession was expected. But there were still some serious concerns about the developments in the economy, because these predictions are pretty shaky based on several things, like, for example, the war in Ukraine, on how they would actually pick up. And of course, one of the big concerns as well is that the banking crisis that we saw in the US with Silicon Valley Bank falling over, First Republic and others, that we actually see that it's not completely resolved yet, and there are still some banks actually in a bit of a shaky field, which could potentially trigger some kind of domino effect still if a couple of them would actually fall over or trigger another bank run. So that's especially in the report, there were a lot of risk factors that were being mentioned, which therefore triggered also markets to actually go down a bit. Another interesting one, if we talk about ChatGPT and talk about artificial intelligence, there was an interesting report that came out from Our World in Data that sort of marked how much investment was going on in this area. So it's quite interesting to see as well how fast this is growing, and this is even only up until 21. Well, if you would actually look at how 22, it's even scaled much further, so it's quite an interesting one as well to see how that developed over the past years. And the expectation is also that especially this year with ChatGPT now finally, I think, bringing AI up to a level that most people can really understand what it's about and what you could do with it, the investment levels are going to go through the roof even more. I'd like to keep it at that. Are there any questions at the moment? I hope you could all follow. I always try to keep it away from the too much jargon, but if there's something that's difficult, please let me know, because I'm always keen to learn as well, to see how we can do this better. Come on, Andrew. Let's give Andrew a big hand, everyone. go.
Clicker, nice. So, thank you for coming. I'm notorious for coming on stage being told to pitch and I don't actually pitch. So, I don't really feel like pitching today, so let's see if we get to it at the end. Just came back from Rio in Brazil, attended the Web Summit. We were with the Dutch delegation, Consul General, and also Ambassador, trying to promote Dutch businesses there. It was a lovely, amazing trip. Came back, had a fever immediately. I'm worn out, guys. So today, what I want to do with you, Pledge, is I'm just going to tell you about what I'm passionate about for about 3 minutes, and then we'll see if we get to the pitch at some point. All right, so 2 weeks ago, I was sort of short on cash because I just paid some rent, put some money into the company, and I was like, okay, where can I pull some cash out from? I don't call my dad again for more money. So I said, well, I did put some money into a trading account, an American trading account about 4 years back. I've never checked it since then. I wonder how it's doing. I looked into it and I saw that, whoa, I made 8x. Sounds like a lot. I'm not rich. I put in a really small amount because I was just playing around. But that's the kind of person I am. I'm not a professional investor. I don't know stocks. All I did was that I was going online and I was like, what stocks are nice to buy? I really love laptops. I really love good processors. I'm going to invest in AMD. And as you know, AMD right now with their processors, you guys, you're nodding your heads, they went up. So I made some money. What did I do right after that the next day? Did I go back to trading? Not really. I'm not interested in that. I have a business to run. I have no time to trade. So that's the kind of person I am. Well, much less educated than everyone else in the room here. Now, who here has watched Eat the Rich? Eat the Rich? Anyone? No? Netflix? Eat the Rich? GameStop?
Oh, yes.
GameStop? Eat the Rich. There we go. Now, it's a funny show because it's all about these people on Reddit, these illogical investors, as you call them, retail investors, which somehow just trying to kick Wall Street off and trying to just like short whatever that they're passionate about, and they decided that GameStop, we love it, someone is trying to bring it down, and we just want to go there and we want to make something happen. Now, GameStop, for those who don't understand, is a game, someone give me a better term, like they sell games, they rent games, and they're really big at some point. Anyone who's a gamer would have heard of GameStop at some point. GameStop even had stores in Malaysia, where I'm from, and I used to rent off them. So the retail investor, and what the retail investor is someone like me, someone who's not educated in investments, are a little bit more illogical. We don't read a lot, we don't do a lot of research, we don't really understand what moves the markets. What we do is that we invest based on emotion, based on sentiment, sometimes things that we're interested in. But we know that through GameStop, there's a force to be reckoned with there, because these small investments, when put to scale, can really shift the market in a direction that you never predicted. And you say it's illogical, it's risky, and whatnot. No, it's just a mechanism you don't understand. Now, I'm not the kind of person who would try to buy GameStop. I think it's a nice, I'm not vested in that. Nor do I want to overthrow Wall Street. That's not my agenda. What I would like to do is I would like to maybe look at companies that are a little bit more cool. Maybe they're making a new processor chip. Maybe they're saving the world in some way, like Andrea, like David behind. These things that are a bit closer to my heart. What I'm trying to tell you is that pool of people that did the GameStop is only the tip of the iceberg. There are way more people out there with the force to actually move markets, and we're not yet seeing let's say, the peak of that mountain or that iceberg yet. So I'll get to the pitch a little bit, right? So what I was trying to say with all of that, if you can catch me, is that these guys, the retail investors, they have the power to change the world in some way. We don't know what way yet. It may be in a bad way, but for now, they have some power. It's not being fully tapped into. How we know that is that GameStop is the stock market is public. In the private market, we still don't see retail participation yet. Less than 5%, in fact. Now, the question is why? Before you look at the slides, again, please don't look at the slides. Just listen to my voice. I didn't really prepare. I just took one of the slide decks and put it up. So what is stopping the retail investor from coming into the private market? Or rather, what did Robinhood, which was the mechanism in which these retail investors used to actually do what they wanted to do, what made it different from the other platforms? So going back to my experience, 4 years ago, I was using Thinkorswim. It's a Singapore-based platform that invests in the US stock exchange. I hated that platform. I had to log in, there was tons of stuff I needed to sign, forms I needed to send across, and all these bells and whistles that I never wanted to touch and look at. I didn't get it. What Robinhood did is make it so easy, one touch, accessible. It got into the head of the investor. It thought a bit differently. This is not a professional person, this is a person that does not know investing. So keywords here is, fun, trust, without knowing anything. Trust without knowing anything. Strange, right? Humans are strange. Learning, games, that's what the retail investors like. So what I set out to do with the team is that I wanted to create a Robinhood for the private impact investing market. Something that users can come on board, feel that it's fun. It creates some elements of trust through different mechanisms. And the most important thing to us, it gamifies the learning. Because the learning, the onboarding process is the first barrier to getting these people to come into the market. If we can get them into that journey as seamless as possible without them even knowing about it, all the better. They shouldn't even know that they're getting into a different private market as opposed to a public market. Don't have to know that. All they need to do is be educated over time and have the journey to be as seamless as possible. So what are our unique value propositions? Well, the UI is there, it's great. I've started to realize we're a bit of a reg tech now. So we studied the regulations, we took the onboarding process and we put it into modules which people would take over time and gain points. Almost like a Duolingo of investments. So reg savvy UX, points and leveling system. On the other side with the companies, what we do is that we use AI in order to increase the transparency, more reporting, blah, 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 blah. Great product, blah, blah. You can rip it apart later. Business model, nice. Yeah, this is old. This is something that we hope to do at some point. Premium user subscription fees for now. It's still diligence fees and campaign success fees. Old model. I hate this. I want to do this. Market size, massive. That's all you need to know. Massive market size. We're all in financial services. We all know that. How are we going to do it? We're going to target customers, the lowest hanging fruit first, the people who are most likely to put the money there, first of all. In terms of, well, we were accelerated by Startupbootcamp. So, Andrea, David, there's going to be part of that journey too. So, invest in them right now. It's the chance. What happened with us was that after Startupbootcamp, we raised some pre-seed funding last year. We got more grants. We're about to get our license. Hooray! With a team that's all in-house, and now we're doing our pilots. We have early adopters, signed and paid LOIs already. Globally validated. So the team, I think maybe because we're quite hyper as a team. So we talk to people everywhere, right? We talk to regulators, international organizations, academic institutions, governments, networks all around the world, because every time we had an idea, we wanted to test something out. I didn't want to wait to run an experiment here. I'm like, no, okay, so hey guys, the ones based in Kenya, folks, the guys based in Malaysia, can you run the same experiment concurrently in 3 different places? I want all the feedback. I want to hear what people are saying. This is me, this is Reka. Now, I may not be a professional investor, but I come from a capital markets background for 7 years. My expertise is really building AI and data science solutions for due diligence and valuations. That's my background. Reka is amazing. The banks and regulators love her. They hate talking to people like me. So if you're like that, talk to her. This is the team. The team is young. Here's one more thing. Am I running over time? Yes. Okay, the team is young. I love that because a lot of our product team are non-fintech people, which I love because we need to build a product different from what the fintech world knows. That's what's important. Why us? Because we built very cheap, blah, blah, blah. We're great. We're raising 1.7. Great, good, awesome. Thanks.
Yeah, appreciate. Looking forward to hearing about Tribes Capital.
Absolutely.
Take it away.
Thank you. I'm David, founder of Tribes Capital. What we're doing with Tribes Capital is quite very simple. So this is Hadam. Now there are 606,600 private hospital currently operating in Nigeria, where Adam is operating with 3 locations. The number one challenge at the moment in that space is the high cost to access electricity. Now, Adam wants to focus his people and his money on his core business. He doesn't want to bother himself about renewable energy or any power side of infrastructure. Now, there's abundant sunshine in that area. It's a no-brainer for him to switch to renewable energy. But again, Adam lacks the capital required for this to happen. Now, when I'm talking about Adam's capital for this infrastructure is small, that is not very interested to a big financial, international development bank. And likewise, whenever Adam goes to his local bank, it's completely very expensive for him in terms of high interest with a very short period of time for him to pay back. So it actually doesn't make sense for him to actually go down that route. And that's why Traps Capital comes in. What we're doing with Traps Capital is quite very simple. We're managing and we're installing this renewable energy infrastructure in Adam's location for a fixed fee, monthly fixed fee, over a X amount of years. On an average, where we see the sweet spot currently is between 10 to 15 years. Now, the key there is this, and that's where the fintech aspect of my business comes in. Everything that we're doing is happening on Traps Capital. So the platform that we're developing happens on that. The capital that we require to electrify Adam's operation happens on that platform. And what is happening in there is people like yourself and corporate as well, they are able to enjoy triple bottom benefits such as earnings, environmental and social impact. Now, where does this impact investor comes from? One of the demographics we've been able to identify are the African diaspora community. In this community last year, they remitted over 21 billion into Nigeria alone, and we're talking about over 40 billion into the continent. Now, apart from this industry, again, people like yourself, people like myself, corporates that want to invest into climate change infrastructure projects. Now, what makes us unique or what makes us different is the skin in the game that I have and the team that's behind me. Likewise, how we're digitalizing Adam to switch to renewable energy solution. And finally, the platform that we're developing in terms of where everything actually happens, because we are actually connecting all our global impact investors. You heard similar thing as what Andrew said just before now. And likewise, Adam as the off-taker of this electricity. So everything happens on that platform whereby we're bringing a direct investment opportunity to people like yourself and corporate. And likewise, you are able to see what is physically happening on this infrastructure wherever they are. Adam is just an example, and I'll tell you why we're going to that side as well. Now, our revenue model is quite very simple. We take a success fee on each project, and obviously we take annuity returns once Adam makes payment on our platform monthly, because the majority of our contract is actually monthly based. But again, it goes as far as 10 to 15 years PPA, power purchase agreement. This is where we are today. We aim to officially launch by end of second quarter this year. What we are planning, and I'm pretty sure this is very outside of the things that is quite interesting for you guys as well, is we wanted to get our first regulated in the UK, because we're a UK company first, and then we'll come to Europe, then we can go to other regions in the world, in terms of US and the rest. This is the team behind Traps Capital, with myself and Jenko as a lead. We, on an average, looking at the team, we have 17-year average experience. My background personally is in sales, BD. I'm an engineer by training, but again, over the past 16 years, I've actually moved into BD roles, into project financing and things like that. This is how big the market is. Currently, according to the Paris Agreement, 300 billion yearly investment is required to electrify sub-Sahara. Where things stand today, we are roughly about 29.5 billion. And what we're looking at, to be precise, going into narrow things down into the healthcare sector, which is closer to my heart, and that's the sector that we're focusing on in terms of our of our go-to-market. In Nigeria, for example, to electrify 6,600 private hospital, we're looking into about 2.3. Currently, we have 5 live projects with live PPA that we want to go live with, and that's value roughly in the range of 5 million in the next 2 years. Again, our route to market is very basic. We are approaching the association of medical groups within each country. We're starting in Nigeria and Ghana, and I'll go to that in a second. I've mentioned that we have 5 projects that is live with us. Our project pipeline is quite strong, over 18, and our development of our infrastructure is coming very soon. I'm David, founder of Tribes Capital. Just want to leave you with this quote. It's an African adage, but again, it's something that is applicable to all of us. If we want to go far, let's go together. Thank you very much.
Reform, and the last one is on the consolidation in the market. So the first one on ESG. This is of course an area that's impacting, basically every industry that's around.
What's ESG?
Sorry?
What is ESG?
Environmental, social, and governance. Thank you very much for asking. Sometimes we get lost in the abbreviations within our own industry. So this is anything around sustainability, basically. And one really interesting thing, what we're seeing is in the industry, everyone is active in ESG in one way or the other. But we did a survey, a global survey under investors, and one outcome was the willingness to accept ESG performance fees. So within asset management, you pay a fee for money that's managed by an asset manager, and you might then also pay a performance fee if the investment is above a certain benchmark. And usually that's pretty straightforward. You have a benchmark, you can have a lot of discussion on what the benchmark is, but that is then the benchmark, and if you overperform the benchmark, you can get a performance fee. It's a really important part of the business model of an asset manager. But what we see now is something all new, that you can have a performance fee not based on financial performance, but based on some kind of ESG metric. And there's all kinds of complications in there, because how then do you measure and what do you choose? But what we see is that over half of institutional investors and also over half of asset managers are willing to either pay ESG performance fees or are considering in charging ESG performance fees. So this could really completely change the business model of asset managers. And the key question, I think, for people in fintech would be, how can we find a metric where we can measure on an easy way how we can calculate whether or not there should be a performance fee. The second one is the increasing transparency and fee pressure. So what we see is that actually this is a continuous trend over the last years, is that there's more and more transparency in the market, and this is pushing down prices. What I took with me is this graph that for both passive investments and active investments, prices are rapidly going down. So I can't really exactly see what this trend could mean for anyone in fintech, but I think it's one of the biggest ones that's impacting my clients at least. And then Dutch pension reform. Not the most sexy topic out there, pension reform, but actually it's a huge impact for everyone. Only most people won't be actually knowing that the impact is big, but also really big impact for the asset management industry. And the key thing that's going to happen is that we're going to change from an environment where you know what you're going to get, and we're going to change that into an environment where you know that what you're going to put into your pension scheme and what you're going to get is purely dependent on how the market performs and how your investments perform. This is going to have a really big impact for the asset management industry, and that has mostly to do with or at least an interesting part of that is to do with communication. So retail or people in a pension scheme are going to want to get more information because they won't have a defined benefit, so they won't have a defined pension payment later, but they will only have a defined contribution, a pile of money that is theirs to invest by an asset manager. And they are going to need information to do these things. Asset managers are not the ones who are going to give the information, but asset managers are the people who are going to have to supply this information towards the intermediaries. So that's also a big thing in asset management. And then the last one, so the consolidation in the market. So one big question which is for asset managers is how big is big enough, right? And in the Netherlands we know that we have some really big pension asset managers, APG, PGGM. But if you look at this list, how big is big enough? Actually, globally, that's still not very big. And not too long ago, NNIP was sold to Goldman Sachs. You might have noticed. And NNIP was, one of the big asset managers. So after that, there was a lot of discussion in asset management boardrooms in the Netherlands, saying, okay, what does that mean for us? And are we actually big enough? And in the end, that comes down to the discussion. There are a couple of drivers for consolidation. One can be scale, so you want to get you want to be bigger, but you can also be more of a niche asset manager, and there, it's less important to have this big scale. I think that's on the consolidation. Good luck.
Hi everyone, and thank you so much for being here. I'm Andrea Pinto, the CEO of Shy. The market is not served currently, and we expect that we can do 20 million, that basically is a 2 billion market that is 0.0005% of the total market right now disposable. And that was really the number, it was not invented. With no competition, because right now big investment banks are only servicing big and systemic banks. They ask for a huge upfront amount that need to be paid even if the securitization doesn't go through. So it's a super huge loss. And only with a ticket of minimum $500 million, normal ticket $1 billion. If you think about the banks we are speaking right now, that is a $6 billion company, do you think that the central bank would allow them to do 20%, 30% of their portfolio in one go without knowing what they're doing? You have the answer. What we do is that we have created a solution that is standardizing the whole process, allows us to diminish the ticket by 10 times. We centralize the cost, we don't let the banks pay, and for this reason we believe that we can help banks in structuring securitizations. And of course, we don't want to go here. Why would you go to fight against the investment banks that are actually our competition? They need to sell the bonds. So we want to create another market in which investment banks currently, with their cost structure, cannot go. Who are we? I'm Andrea Pinto, the CEO. I have been in the last 5 years doing research on efficient structuring method, and for this reason I was nominated under 30 for Forbes Italy. Then we have Antonio over there at the computer. He is an experienced data scientist with a PhD in computational physics in Boston, and 25 years experience in complex modeling and nonlinear optimizations. Dario Celentano is not here. He's I was lucky, best friend since when we were very young. Actually one of the best lawyers in Italy in the LA paper doing banking, finance and securitization. And then we were able to attract many major mentors with more than 200 years of experience that are helping us for free to reach where we want to go with their contacts. So where did I start? I won the best European thesis for my thesis on securitization, Best European Awards. And from there I started doing private equity and then Bain, and then I left when the meeting that I had with public authorities were more than my days off from work. I was incubated by Boston Consulting Group and by CNR, that is the National Center of Research, where I met Antonio. Then I started to do research I was tested by Unicredit in Intesa. Intesa actually helped me to write the thesis. And then we were back tested on algorithm by Prometheia, demonstrating that sometimes the securitization that we can structure our models cannot be structured with the traditional one. Then we went through a 10 months due diligence with Bank of Italy that was successful. And then now, just in the last 6 months, we started to pitch to banks. And after being selected by Startupbootcamp, that without them we would not be here in general, with all our contacts, so we really appreciate their help. We're currently doing a use case of 1 billion with Prelios, one of the biggest independent asset managers in Italy that do non-performing loans. We have an IP pending, we sent the paper out. This is the first paper in the world describing how to structure securitization. You can check online, I have the three. And we're currently speaking with EY, Luxembourg, and Allen & Overy that are interested to support us, even considering to viabilize these fees. As you know, this is crazy because normally they don't do that. And tomorrow we are going to speak with an hedge fund interested in investing in us and buying our asset. So right now we're raising 1.2 million euros. If you want to, of course, have a chat with us, we're more than willing to do that. Why? I'm finishing and a little bit over time. In the next 12 months, we expect to do our first pilot transaction. We're currently speaking, that's why I was interested in ESG, with a small bank with 6 billion assets that is going to want to securitize 200 million renewable energy in Eastern Europe. So exactly social impact and renewable energy ESG. And lastly, if you want to already register for a 30 minutes call, feel free to do that. Thank you so much. I wait for you.
Hope you still have the tab open where you can vote. You want the QR code? You can still do it. Yeah, just be sure. I hope you got the chance to vote for everyone. Are we getting the numbers in? Why are we getting the numbers in? All right, then let's put back the presentation. What do we have here? Okay. Yes, have we got all votes in? Final thing? Yeah. Yeah. Right. Clear. Then I'd like to bring back Andrea again. You get the best part. Gives you a nice token of appreciation. Always useful in the Dutch climate, right? Yeah. Well done, and good luck on your pitch this Friday as well. Yeah. All right, everyone. I really hope you enjoyed this event. We always try to make it a bit fun and interactive. So always keen to get your thoughts. So if you have cool ventures, if you have cool projects, but also if you have difficult questions or ideas, please come to us and talk to us, because we always like to improve and get new topics on the agenda. We've got these events in any case coming up. Fintech Insights is an event that could help you, basically tells you a bit about the basics and the dynamics in the market. So for people that are new to the industry, especially, that's an interesting session to join in. We have a roundtable on financial crime, quite a hot topic at the moment. That's coming up. And we do an investor startup matchmaking. So for everyone who's raising funding or who's keen to invest in startups, please give us a signal if you are not on the list just yet. And we've got a new meetup coming up. Normally we have the second Thursday of the month that we have our meetup. But that's actually at the same time as Money 2020 in June. So it's already 1 week earlier on the 1st of June that we have our next meetup. So please put it on your agenda. And we'll look there into personal finance, wealth and pensions. And there we'll definitely dive also a little bit into the pension reforms as we were discussing also.